Let's talk about silver here for a second. What's your prognosis on silver?
I think that the $50 highs, you're looking at one of them there, and there was one back in 1980, are going to be blown to hell out. And we're going to end up with a surge, this move that we're in right now, that's likely to only pause in the $65 to $70 range. I've got some reasons for that. That's not a top. In other words, that's where I think the next pause will be. Pause of what you would call significant pause, where you actually spend 2-3 months going sideways or down. Mm-hmm. But until you see that gusher, I wouldn't be concerned about it. I think you're going to, that'll wake up the sleepy audience out there when you take out the $250 highs. And finally, by the way, copper's above its 2011 high. You know that? Gold's above its 2011 high. Why can't silver be above its 2011? Okay, maybe it's somebody made a mistake. Markets often do that. They underprice themselves, and they suddenly, I catch up. And I think that's what silver's in process of doing here.
Understood. And the silver miners, are they following the same fate as the gold miners?
No, the silver miners aren't as close to the 2000. Look at SIL, for example, SIL. Silver. It's in the 60s, and you'll know its high back then was in the 90s in 2011. So unlike GDX and XAU, which are above the 2011 highs, gold's above it, gold miners above it, silver's approaching. They're still a good distance away. But that recent action you see in SIL in price is more dynamic than it was in GDX even, and on a percentage basis. So when we run a spread chart measuring SIL price versus GDX monthly closes, what's their difference expressed as a percent? It's in the process of breaking out, meaning that it looks like the silver miners are in the process of shifting to an outperform mode versus gold miners. That would happen to fit with our view that silver's doing the same. So the place to look, we think, within the monetary metal area is silver and silver miners, less so gold and the gold miners. Though they're all going to go up together, I think that the silver components are going to go up far more on a percentage basis, a catch up.
Right. Yeah. They do seem to be coiling up in this flag here with regards to SIL divided by
that's even it's 90. Actually, when we do a monthly close only and do a parallel channel through a downtrend, just a simple downtrend through the peak closes, forget the highs and lows, just the closes of the months, the green bars you see there, you're out above it right now, marginal. You're pressing at it, let me put it that way. You close the month out anywhere near 95%. I think right now it's, what do you say, 93.75 or 93.80. So you're about 1% below where that spread breaks out big time. Yeah. And I think you'll gush up out of this basing action, which goes back to 2022. You're where you were then. So actually, if you bought silver miners in 2022, right now you're doing just as well as if you bought gold miners. Meaning they're at the same percent level. Doesn't feel like it, but they have. And I think they're about to shift to outperform. This base looks like it's ripe for an upturn on performance. And you could gush up pretty dramatically. And that would translate to price dynamics as well.
Gotcha. So speaking of gold, let's go ahead and take a look at that now. Currently at 36.93. Let's go ahead and shift over to the daily candlestick. Big red candlestick today.
Yeah, you're going to get some. We put out a report last night before we opened and before the Fed event today. There's a good chance you're going to get a correction in the gold miners in particular that's going to be noticeable, but I think it's only going to last about a week. And I think it could smack some people and they say, oh my gosh, I'm getting killed on the miners. No, you're not. Put up GDX if you would. Monthly would be fine. The gold miners, go back to 2011 if you can. Yeah. Okay. The high there was around, 60 something. Okay. And you blasted through that. Okay. Now that you've done that, you can take a breather if you want. And I suspect even on a monthly chart, what you're going to see in the next week or so, let's say that's some downside, is going to be short-term noise. So if you're in call options that are about to expire and, et cetera, maybe you're concerned about that. But from an investment point of view, I think it's meaningless. And so a bad daily candle, fine. That's part of what I think is going to happen. You get some kind of little pause here, but you've just broken out. And that's true with XAU index as well. XAU is out above its, this is a different, this is GDX versus XAU.
Yeah, so this GDX versus the gold spot price. So, and you can see.
Versus gold spot. Yeah, okay.
Yeah.
That is a very important chart. Yeah. You were in a range back in the 1980s to 2000 on XAU versus gold, a range that was in the 35% to 17.5% range. If you go back further, if you can, I don't know if you can. No, you can't. Okay. But if you just run XAU versus gold, you'll see in a range much higher than what you're seeing now. And when we went into that bear market, like 2011 to 15 in particular, the spread collapsed. You took GDX, for example, XAU versus gold down to 4%. And it was in a zone from 17.5 to 35% for decades. So you took it, you might as well take it at the zero. It was so dirt cheap. Yeah, this is, okay. Anyway, it's now come up out of the last several years of downtrend. You've come up out of it. And there is a base there. You can see the upper end of the base. We think this surge is going to get there. And we don't think it's going to stop this time. A lot of momentum factors say, no, you're coming up out of this base. You've spent a decade plus below that upper line, and you're surging now. And you can see that the last several months, the gold miners have beat gold dramatically, sharply. It's reflected in their price charts as well. Gold's gone up nicely, but they've gone vertical.
Let's talk frankly about silver, because I know many of you are sitting there wondering, when does this thing finally move? You've seen gold punch through its 2011 highs. You've seen copper do the same. You've watched miners, particularly the gold miners, break out and push higher. And you look at silver and scratch your head. Why is it still lagging? Why does it look like the market forgot about it? I'll tell you right now, it hasn't. What's happening with silver is a textbook case of a market underpricing itself, of a lag that eventually turns into a surge. And I think we're in the final coiling stages before that catch-up happens. I've got my eyes on the $65 to $70 range for silver, not as a final top, but as the next meaningful pause point. That's where I expect a couple months of sideways action, maybe a dip, maybe a consolidation. That's normal. Markets don't go straight up forever. They breathe, they rest. But before we get there, I think silver is going to surprise a lot of the sleepy audience that has been lulled into thinking it's a boring asset. The moment we take out those $50 levels, the old 2011 highs, the psychology shifts. People who said for years, silver will never get back there, suddenly realize it just did. And then they scramble. That scramble is what I call the gusher. Here's the irony. Copper is above its 2011 highs. Gold is above its 2011 highs. Why on earth should silver be left behind? Markets sometimes make those kinds of mistakes. They underprice an asset for a decade, and then, as if waking up from a nap, they lurch higher to catch up. Silver is in the process of doing exactly that. And don't just look at the metal. Look at the miners. If you study SIL, the silver miners ETF, it's still below its 2011 highs. It was in the 90s back then. Now it's in the 60s. Compare that to gold miners, GDX, XAU. They've already punched above their 2011 levels. So silver miners are lagging on an absolute basis. But here's where it gets interesting. On a relative basis, when you run a spread chart comparing SIL against GDX, you see something dynamic happening. SIL is in the process of breaking out versus gold miners. It's been basing since 2022, churning sideways, frustrating traders. But now that base is pressing against resistance. If it closes out a month near 95%, which is just a percent or so above where it is now, the breakout becomes official. That would mean silver miners are shifting into an outperform mode relative to gold miners. That fits perfectly with the thesis that silver itself is about to outperform gold. Now, markets don't always give you instant gratification. It doesn't feel like silver miners have been doing as well as gold miners. But if you bought them in 2022, you're roughly in the same place on a percentage basis. It's just that the feel of the trade is different. Silver wears out its holders with long stretches of sideways action. That's why I say it's coiling. When it finally releases, it releases big. And when silver miners start outperforming, that's usually a sign the underlying metal is about to lead. Let's pivot to gold for a moment, because gold has been the leader in this move. Right now, gold is around $3,693. We just saw a big red candlestick on the daily chart. People see that and panic. They think, oh my gosh, the run is over. But let me tell you, that's noise. We actually put out a report before the Fed event warning that gold miners could see a noticeable correction lasting about a week. Nothing unusual about that. It might sting if you're holding call options about to expire, but from an investment point of view, it's meaningless. Look at GDX, the gold miners ETF. The highs back in 2011 were in the 60s. You've blasted through that now. Same with the XAU index. Once you've broken out like that, you've earned the right to pause. You can take a breather without changing the larger trend. On a monthly chart, this pullback will be a blip. It won't change the breakout. So yes, expect some downside noise in the near term. But step back, and what you see is a structural breakout that's still in its early innings. Now here's a very important chart. XAU versus gold. This is where the bigger story emerges. For decades, from the 1980s to 2000, the XAU to gold ratio traded in a range between 35% and 17%. Then came the brutal bear market from 2011 to 2015. That ratio collapsed to around 4%. Think about that. For decades, miners traded between 17 and 35% of the gold price. Then they cratered to almost nothing. It was a historic undervaluation. You might as well have taken it to zero. That's how dirt cheap miners became relative to gold. Now fast forward. Over the last several years, that ratio has been building a base, and in recent months, it's come surging out of that base. That tells us miners are in the early stages of revaluing higher against the metal itself. The base lasted a decade. When you break out of a decade-long base, you don't stop quickly. Momentum carries you. And that's exactly what's happening. The miners have been beating gold sharply in recent months, which is reflected in the charts. Gold has gone up nicely, but the miners have gone vertical, and that's the point I want you to understand. Silver is in the same position now that gold was a couple of years ago. It's lagging, building a base, frustrating investors. But the moment it breaks that base, it doesn't just meander higher. It surges. And when silver surges, it tends to outpace everything else in percentage terms. Now let's add some external context. A recent Bloomberg piece pointed out that global silver demand is hitting record levels, especially from industrial uses like solar panels and electronics. Supply, meanwhile, is stagnant. Mining output isn't growing fast enough. That's the fundamental backdrop. Layer that on top of the technical picture we just described, and you get a powder keg. You don't need a PhD to see that supply and demand are going to force prices higher. And the public is still asleep. Most investors don't own silver. They own stocks, bonds, maybe some gold if they're conservative. Silver is off the radar. That's why the upside potential is so massive. When sleepy audiences wake up, the repricing is violent. That's what happened in 1979 and 1980, when silver shot to $50. That's what happened again in 2011, when it retested those highs. And that's what I think is in process of happening now.